I can like fairly assume that all of us are from like middle class or upper middle class families. So, funding for US education on our own would be pretty difficult. So we would need some sort of financial assistance, and that's where bank and loans come into picture. So, that's what I thought. I researched, wrote a lot of articles for you guys, and that's when I realized there's no singular platform which discusses all of these things and helps you find the best rate of interest and helps you save financials and money when you're taking a loan. So that's how this we came across GradRight, and that's how this collaboration happened. So you guys know Shishti, like she's been like my partner in crime on Yocket, like you would know if she's been pretty active with me. She's also an incoming CME student. So I'll give over to Shishti, and though we will proceed the webinar, I just have one request for you guys. Whatever doubts you have, do speak up. Let's keep this and like a very interactive session, and we are hoping to solve all your queries regarding finances and bank loans. Over to you, Shishti.
Thank you, Utkarsh. That was a very meaningful introduction for me. So I know how being an incoming student, I know how much of an hassle getting a loan is, and how we basically need to negotiate with a bank. We go there, try to get the best rate of interest, try to reach out to other banks, trying to get to know what the other rate of interests are, and it takes in basically a lot of your time and effort, and it might take at times months of time. And we know how banks in India work. So which otherwise could have been spent on writing better SOPs. And so here GradRight comes into the picture. They basically solve this problem, and as they get all your own loan requirements, and all the lenders basically, after you put in your details, within like a matter of few hours, all the lenders bid for you, and you get to know the different rate of interests which the lenders offer. And that basically saves a lot of your time and money. Time and money, of course. I mean, you get the best rate of interest on, all by the effort, all by the comfort of sitting at your place. So, and here we have Mr. Sasi, the co-founder of GradRight, and he himself has been a BITS Pilani graduate, and to add to it, he's been a Fulbright scholar who did his master's in higher education from UPenn, and he's there to talk about GradRight, which is a fintech startup basically focused on student loan and to avoid the unnecessary burden and hassle for them, and so that they get the best deals for them. And Sasi, I think one of the most burning questions would be that how does the entire student loan process work, and what are the advantages and disadvantages of different types of bank. So if you could start off addressing those questions, that would be great. And guys, please keep the session interactive. Please keep on posting your questions in the chat box, and as and whenever Sasi gets time, he'll address them. And over to you, Sasi.
Yeah, thank you, Srishti. Thank you, Utkarsh. We'll keep it interactive. The idea is to really share what we are learning, because we have been closely working with the lenders. We have been working with many students, hundreds of them in the last few months, to help them on their student loans. So I just reflect based on my own experience. Back in my time, I never thought of a student loan, for example. I was lucky to be selected for the Fulbright scholarship so that I could afford to spend $80,000 out of their pocket, right? So for my master's. But I see that if at all that's not the case, I wouldn't have gone abroad for my master's. So there are many things that I came across in the last 10 years. My experience has been in the higher education space. We set up universities like Ashoka. We help universities, new set of universities getting set up right now, like Kriya. So there are many things that we do in this sector. So I would love to chat about what we learn, especially on the student loans part. Now, before I get into just a brief introduction around the sector, I would like you to feel the comfort of just putting any questions in the Q&A section. There is absolutely nothing that you can stop yourselves from asking. Feel free to ask, and if it is too specific, we'll take it separately. If it is something which we can address the concern of many students, we'll take it up and make sure that we address. But every question we'll try to answer that, and maybe it will help you. So over the last 2 years, what we understood working with multiple lenders are that there are 4 types of institutions. Now, this could be something that you're aware of. I'm just structuring this for our own understanding. Number one, there are public sector banks, which our moms and dads have been quite friendly with over the decade or two in the past, and we have been interacting with many of these public sector banks in our lives, and they have a certain set of criteria based on which they give education loans, and most of them, because it's a public sector bank and behind them there is a government policy that will drive things. Education loan is something that they are interested in giving, right? It's a priority sector for them, and they are wanting to give public sector these student loans. What I'll talk about these four, and then I'll deep dive into what are the advantages and disadvantages of each of these banks. Public sector bank is the first sector. The second one is the private sector banks, like the ICICI Access, or many of the other banks that could be around and who are giving education loans. The third one are the NBFCs, non-banking financial companies, which are basically appear to, or in general in their service also, they're very service oriented and try to give options that others don't come up with. And NBFCs is the other sector, other set of institutions. The fourth ones are only meaningful for a few people, which are the international lenders. And even within international lenders, there are two types, right? There are people who are readily giving you without a cosigner, and there is no problem with, say, you not having a relative who will sign off the loan for you in the US or any other country. They will give you a loan without a cosigner. There are other banks and institutions, international ones, who will ask for you for a cosigner who is there in the US with some credit history built. Now, within each of these four types, let me deep dive into each of them, then we can roll back into just learning from your questions. So please feel free to think about the questions that you want to post, and keep them coming if there is something that you surely want to touch base in this webinar. The first part is the public sector bank. One of the advantages that public sector banks have is that their rate of interest is very competitive compared to any of the Indian banks, just because they get money at a cheaper rate, and they are basically looking at just making sure that they promote educational initiatives, so the margins would be lesser compared to the other banks. So they are able to give you an interest rate of, say, even up to 8.5%, 9%, 9.5%, right? It will generally be between 9 and 11%. And in terms of the disadvantages, they actually are quite strict about getting a collateral in place. So if you don't have a collateral which matches a certain set of conditions, then they don't really give you the loan, because for them what they care a little more is what is the security. Like, they don't care whether you're going to CMU or Harvard, not to that extent that they will get the difference into the offer. The second part is private sector banks. What are they good at? They have good service over decent interest rates. They're not that costly, but they have good service. It's a good mix of both of them. And the advantage again is that many of the private sector banks are still learning around, whom to give, whom to not. And so they are able to give some good offers to a certain students. And for some, it may not be too meaningful for them, right? So that is another part. And the third sector is, but they're constantly improving, the private sector banks, in terms of how best they can expand to more universities and give more loans to more students. The third sector is the NBFCs. You see, HDFC, Credila, Avance, Auxilo, or Incred, and these NBFCs, basically, they are more student friendly. The process is faster. They get you the loan, that you want more often than not. They show greater flexibility. They focus a little more on you rather than what is your father earning or what is the collateral you bring. So that is generally a trend that we see, but everyone is trying to move ahead and try to improve and make it student friendly as much as possible. The fourth one is the international lenders, wherein you will find that the rates are even, even better than some of the public sector banks. In fact, if you want the lowest interest rate, mostly you will find it in this bucket, right? But they don't offer it to every student. They don't, it's not just about the interest rate, because if I want 40 lakhs and you tell me that I will give you 10 lakhs, but it's the best interest rate, it doesn't really help me, right? So if I want 40 lakhs, I want 40 lakhs. Without that, I can't start my university. So that is, that is a slight disadvantage there. They only look at certain universities, and because of coronavirus, there are some international lenders which are not moving forward with the loan dispersals. So there is, a disadvantage that may come in because of them. But whoever they are giving and saying that here is a loan, you will, and if the maximum loan amount is met, then you will find one of the best interest rates. But overall, it is not, can I pick one sector and say that this is the best one, go to them and take your student loan? That is not something we can say at this moment. It is very student specific. Yeah, so that is the overview I suppose I could give, but I want to focus more on what questions are coming in so that I can answer, in a more focused manner, and it helps you. Right, so let's see if what kind of questions are coming in. Srishti, should I take it up from the Q&A section? Are you on mute? I'm assuming
Yeah,
okay.
Sasi, definitely go ahead.
All right,
you can take the questions.
All right, so tell us, so one of the questions that came in is basically, I'll start from the top. Tell us more about unsecured loan they provide us, how its repayment method, ROI, and why should we prefer it? I am assuming this is generally about any unsecured loan. See, non-collateral loans are prevalent and they're growing in number. Every institution is trying to come up with new ways of giving these non-collateral loans. Now, in the non-collateral loans, what is important for the banks or the institutions who are giving these non-collateral loans is your employment potential. What they're looking for is ignore the cosigner at times and ignore the non-collateral for sure. But they want to look at you as a person. If you going to say, Georgia Tech University, will you actually get out with a good salary? What is the probability of each step? Number one, you getting into Georgia Tech. So if you have an admit, that gets clarified for them. Number two, they will see whether you will actually graduate from Georgia Tech or will you drop out. In the US, there is a huge problem of dropping out in the middle, but in most of the Indian students, that's not a concern. The third one is basically, once you graduate, how fast will you land in a job? And they look at that data. And fourth is, once you land in a job, how good the salary is. So there are different things that they look at. There is no strong data that is yet built with these institutions. Some of them have, some of them don't, some of them have partial data. So, but everyone is trying to get some visibility. And so in the sector, in the last 4-5 years especially, this non-collateral loans have been picking up. As the data improves, you will see more of them coming in. And in terms of ROI, see, the simple calculation is, and you could use, banks, eligibility criteria as your checkpoint. If you are eligible for a non-collateral loan, and if you are getting a good interest rate, that means they have some data which shows that whatever university you chose is actually leading to some good placements. So if at all you have one or two options and want to compare return on your investment, you could also evaluate your options based on these non-collateral loans and the offers you get. And the rate of interest, one of the biggest misconceptions is that for a non-collateral loan, the interest rate is higher, and a collateral loan will mean the best interest rate. This is not true. And you'll be surprised because one of the learnings is that, for example, you look at international lenders, there is no RBI controlling these international lenders. Their rate of borrowing is lesser. So they are able to give you even a 7% or a 6.5% interest rate when, say, an SBI is giving you a 10% with collateral. and they are able to give 6.5 because they take the money at 1% or 2% and give you at 6.5, whereas SBI is taking money maybe at 4% or 5% and is giving you at 10%. So I'm not stating anything against any bank, but I just want to explain in the spirit of explaining the trend. It is important to understand that there is some advantage in terms of interest rates there. But we'll come back to the idea of whether a cheaper interest rate from a foreign lender is better or not. But let's move on to the next question. People who is attending this, so let me get to the next one. I have a loan approved from Prodigy Finance. Now, if I defer my admission while my case is carried over to the next year, or should I have to apply again? Generally, they mention the validity of their offer, and if you uploaded all the documents and they are actually putting together a sanction letter for you, that will mention what is the expiry date of the sanction letter. So you should look at that. And because of the coronavirus, many of the lenders are actually quite flexible, because it's an industry-wide trend that many students are deferring their option. Say 50% are not deferring, right? So if 50% is deferring, they have to cater to their needs. So they are coming up with extensions, which will lead to you not applying again. So, which type of banks am I talking about currently? So this session will be recorded, Siddharth. Let me get back to you on that with that recording to just repeat whatever we went through. Could someone help me with the next question? I'm not able to see the one.
Okay. Can you please explain the moratorium period in brief?
Right. So the moratorium period is basically that you will have some leeway or some grace period, and and this is something which is specifically available for students, student loans. It is that you don't have to start repaying the interest and the EMI right from the day you take the loan. Generally, with any loan, that is how it is. If I'm buying a car, I take, say, 10 lakhs, I actually pay them back right from the next month. The interest rate on that, etc., and the principal coming together as an EMI. But in case of student loans, the moratorium period establishes the possibility of you not paying anything for 2 years or 2.5 years or at times 3 years from the time you take it, because you're often going for a postgraduate program with that student loan. People or banks understand that you are basically not be ready to pay anything until you graduate and start earning. But is it a favor that banks are doing? In a way, yes. In a way, no, because during the moratorium period, the EMI gets accumulated, and all of this accumulated interest in some cases will be compounded. So you need to look at what is the condition that is getting placed within this moratorium period. How is the interest being calculated after 2.5 years when I start paying back? Are they putting interest on interest again? So these are some of the things that you should be mindful about. And what's the next one, if you don't mind? There's some problem with the scroll, I suppose. So Utkarsh or Srishti, help me with the next question, please.
Yeah, all right. So Abhishek asks, I have a loan approved from Prodigy Finance and now I defer my admission while my case, will my case be carried over to the next year or should I have to apply again? So
Right.
that's the
So
question, Sasi.
that is I think we finished that. We talked about that. Can we move to the question after Siddharth?
Yeah, it's asked by Dinesh. He basically wants to know that he has heard that HDFC Credila can provide non-collateral education loan only based on GRE score, 30 lakh for GRE, 340 lakh for GRE, 310, and so on. Please let me know if this really happens. And second question is, what are the advantages and eligibility to get a loan from Prodigy Finance expecting minimum 40 lakh?
Right. So it is important to understand one broader principle, which is that there is no standard set of offers in many of the bank's policies. They have a broader range of, I will give a loan of up to, say, 50 lakhs, and I will vary the interest rate between, say, 10.5% and 14%. So That is how it broadly comes out to the student, unfortunately. But that is what is creating these questions. For example, right, you don't know what you may get. Now let me explain how these banks look at. And it is true that GRE score based offers do come out, because if you have a GRE score of 330, you are most likely to get into a certain set of universities, and those placement outcomes are decent enough, so they connect your GRE score to the potential of you earning a salary after 2.5-3 years. So there is a pre-approval and possible even before an admit with such GRE scores, right? There is a limit of about 310 or so, above which you will start getting these non-collateral options. With each bank, it varies. Now, in terms of the second part, which is around say Prodigy Finance and getting 40 lakhs, it again depends on what university are you going to and what program are you choosing at that university. Not all programs at a particular university will be even eligible for Prodigy Finance, for instance. They pick up programs for which the placements are actually have been proven to be good, and they are comfortable giving more money because they don't see the risk of you not paying, for instance. So they give you more money and they may give you a very good interest rate if the data speaks to that. So data at these institutions is at a program level. They are not at a GRE level. And even Credila or any institution or anyone who puts out an offer or a pre-approval, they will most likely end up, giving you the loan on the pre-approval base, on the pre-approval that they sent out. But you should understand that they are going to look at each of the programs that you have chosen, you got admitted to, and what is the potential of each of them, as much as the data is available with each of the institutions. It is more important for these international lenders who are taking a call without any collateral and without them meeting you in person. So there are many verification checks that will happen if the lender is in India, which will comfort them. But for international lenders, they are not doing anything of that sorts. So they have to base things based on just data. Whatever you fill in the application, that is being analyzed, and that is what is creating your custom offer. And in fact, we see that it is so different with each lender. If for example, I am admitted to University of Pennsylvania, if I would have reached out to a bank, they would have told me that I will only give you 40 lakhs, or someone would tell me that they'll give me 30 lakhs, and a 30 lakh interest rate would be higher, 40 lakhs interest rate would be lesser. And there are at least 20 institutions that are in total in the sector, 35 student lenders. We don't hear about all of them because of various reasons, but active players in the sectors, there are at least 15 of them, right? So if you want to really understand the offers, it is not really possible right now until you call them up or go to the website, fill in all the application details, give them the most important details, and then ask what is the possibility of me getting 40 lakhs from you, right? So in fact, that is what we are addressing. We created a platform where students can create an anonymous profile. Your contact details will not be shared with any lender until you express the need of it, or if you think it is worthy, and let them pitch for your profile. Let them all compete. Currently, what is happening is an institution can say that they will give you a 12% interest rate. But what if there is flexibility of they lowering it to say 11%? A student in Nagpur is not really understanding what a student in Hyderabad is getting. So what we see is if a student can get 11%, let the competition among banks drive that, and that will improve what student can get. And that is why we set up this platform wherein you can create your profiles to exactly know what is the offer from all the lenders. And these are custom offers that they are submitting, sitting in their own homes or places where they're working from, right? So these are real people who are communicating these offers, or they would have standard templates based on which this may come, but it will be more specific. That may help. So the next one.
Yeah. So the next one is by Darsh. So he says, I've heard that even though private banks like HDFC Credila have higher rate of interests, but they provide more flexibility and convenience. So how does that factor affect a student? And can you give such examples to get a better understanding? So he wants on the whole HDFC Credila space, he wants better understanding that how will the whole providing more flexibility and convenience affect student.
Right. To answer that question, let me step back and talk about what is important in evaluating a student loan, right? So many people talk about interest rate, and Obviously, that is very important, because that can lead to a difference of up to even 20 lakhs if at all you're paying your loan for the next 5 years, based on the amount that you take. So the savings are significant just based on the interest rate. But there are a few other things that you may want to be mindful about. For example, the maximum loan amount, which is practically something that you will obviously evaluate, and then the interest rate that we talked about. The third one is, how is the application process, and how easy it is, or the entire documents and all of that. For example, if I walk into a public sector bank, there is a possibility in these times that they may take up to 30 to 40 days to process a loan. That is my personal opinion, looking at how things have been moving with some of them. I'm not against any bank, and I talk from a student point of view. The question is, should I wait for an application to be processed and wait for a result of, for 30, 40 days, and then see that, oh, I got rejected, or I may get processed, or they ask me for different documents, then I have to go back. So the customer centricity is something that I would urge students to think about and evaluate. And we could provide you feedback on specific cases on how different processes aligned with each of the banks, if there are names that you want to take, which I would avoid on a public forum. So you could message us, and I could talk about what are the problems in each of them, right? And in terms of Credila or any other NBFCs that you today see, and be mindful that HDFC Credila is not a bank. HDFC Bank is separate, and HDFC Credila is an NBFC. And HDFC owned Credila, like it took over 100%, so it became something which is under HDFC, but bank is separate and NBFC is separate. So Credila is an NBFC, and many other NBFCs actually, offer very student-friendly process, and they could actually be much faster in just letting you know what they can do for you. And they're also more flexible. So the fourth point that you may want to understand, apart from customer centricity, is the flexibility in eligibility criteria. For example, there is a collateral, and if you walk into SBI for a 9.5% interest rate or a 10%, they may say that, oh, in this document, this is not there, so I'm not giving you a loan. But an NBFC might be a little more flexible, because that risk is there that the collateral may not be sellable if at all you don't pay, but you are a good student. So they combine these two and see that as a whole package, and then see whether they can take that risk on the collateral or not. So the flexibility is the fourth parameter, which also plays out to be an important role. The fifth one is the hidden costs or the processing fees, or not always they are hidden. Most of the banks state up that there are processing fees involved, but they don't take it up in the first conversation, for example. Let's put it that way. The idea is to evaluate, to understand what are the costs that you will get involved, and in what scenario, right? So the first thing is sanction fees. There are Prodigy Finance, they give you a good interest rate, but they charge you a 4% processing fees. 4% on 50 lakhs would be in the range of 2 lakhs. So you can, in fact, the good part is you can add it to the loan. You don't have to pay upfront. Whereas there is Leap Finance where you need to pay upfront. So they are, but there is a lesser processing fee involved. And in other cases, most of the public sector banks, it's only about 10,000 rupees that they charge. In terms of most of the NBFCs and private banks, they charge about 1 to 1.5% as the processing fee. The key point is, all of these processing fees could change based on your profile, based on how attractive you are for the lender. And that is what you could do on the platform, wherein we are trying to bring together some exclusive offers for students which match what lenders want, so that you get a flat out 50% off on the processing fee. And that is the advantage of actually being on the platform instead of directly going, a knock by knock with each bank. So please, let's move on from the other question. And am I being too fast, or am I being too slow? Any feedback?
Sasi, one thing I had to say, your net's frozen. So could you just fix that? I don't think, guys, can you see him? Like, just post on the chat. Like, if you,
Yeah,
because
so
I
see, we
don't
are
think I
not
can see
able
him.
to see you actually. I think
Oh, is
your
it?
net frozen. Yeah.
All right. Let me fix that.
All right, people said no.
Okay, so let's keep the questions coming. I will try to fix this meanwhile.
Before that, guys, like, do you have like a fair idea of what GradRite does? Like, because I don't think we have like properly introduced and told them like what's the advantage of GradRite and everything. So, do you guys know about GradRite?
Right. So
A couple
let
of
me take
people
a dig
would
at it.
know. Yeah, sure,
Right.
Sasi.
So GradRate is basically a fintech startup which is trying to make sure that students take the cheapest student loan at the best terms possible. Right. What we see today is that 80% of Indian students actually miss on savings of up to 20-25 lakhs. Why is this happening? Just because we talk about 2 or 3 banks and then finalize, or maybe 4 banks or NBFCs or international lenders, and we finalize the loan just among them. And this is clearly causing a disadvantage for the students. It is very hard for students to ask every single 15 or 20 institutions out there, with their profile, because all these offers are very custom made, and they vary based on the profile, and it is too hard to go through all of that. So what we did is we found a middle path. We created a platform wherein students can create their profile, and this profile goes out to all the lenders, all the banks, the NBFCs. There are private banks, there are international lenders. And what happens is that they look at your profile without your name and mobile number, so that there will be no spam calls or any disturbing calls day in and day out. But the idea is to let them know that you are going to say Texas A&M, you have a GRE score of so much, you have done so much in your past, you graduated from, say, a VIT or an NIT with certain background, or any college that you went to, because these are all the things that they evaluate. And we figured out what are the main points that they would want to value, and we created this platform which will enable you to communicate these things to the students. Based on these profiles, each of the banks will actually create their offers. Say that, okay, Utkarsh, we like that you are going to CMU, you need 45 lakhs. I will give you 45 lakhs. My interest rate is 10.5 to 11% for you. And this is not something which often comes out in the public on their websites. This is based on your own profile. It's more like if you go to a bank and if you sit with the education loan manager, what is the conversation looking like? Will you get a more nuanced feel of what you get? So we are changing all of that to happen on an online platform and within few seconds or hours in some cases. So the bidding really connects you to the bank without actually any transaction on the contact details or any of them. But most importantly, the banks would see what other institutions are bidding. So it's a bidding platform. That means each of the banks is competing for, say, Utkarsh, who is going to CMU, and they will see that, oh, there is another bank which is putting a 40 lakhs, or 45 lakhs at 10.5. Let me put 50 lakhs at 10.5%, so that the student would actually see my profile to be more useful. And then we come up with, we are adding more nuances around the other factors we talked about, the customer friendliness, or the process orientedness of different banks, and the hidden charges or the processing fees. So that visibility will happen through right now through some data on the platform, or through advisory that happens on for free on the site. So there is a complete free platform to access around 10 lenders and get all of them compete for you. That is what GradRite is doing. We saw that this process has optimized so many things on many business fronts, right? Why can't we introduce this model in student loans, so that students get empowered, and students will not be thrown an interest rate which is unreasonable? And that is why we thought this model would work best for students. So sorry for a pitch, but I genuinely believe in that cause, so I can't stop talking about this. So please, what other questions can I talk about?
The other
No, Sasi,
question
it's
I think
amazing.
is, yeah, it's amazing actually, Sasi. The way you explain, and with such intricate detail, Sasi, that gave us a fair idea about how this entire thing works. So we have another question posted. It talks about, does GradRite help us in finding the best course for you and applying it to the university?
Right. So that is so fundamentally GradRite is focusing on maximizing the return on students, while funding part, there are two products that we have: Select, Fund. The Select part is actually focused on making sure that you choose the best university for yourselves based on return on investment, based on what these banks are evaluating. So how can we bring them out to you and make sure that you use data science to really evaluate which program is better? And of course, alumni conversations are always there for us, and Utkarsh and Srishti kind of people are always there for help, to help us understand the nuances, which data doesn't cover, right? But that really is a missing piece we felt, and that is what we are trying to make sure we bring it out, right? The second part is the fund platform, which is the India's first student loan bidding platform. So we do help students in identifying universities that are best for them, and that's a free both of them are free platforms. And the second one is basically focused on the loans, so that on one, you maximize your outcomes. On the second product, you minimize your cost. So your overall return on your educational program is maximized.
Okay.
Yeah. So what else? What can we talk about? I'm trying to fix the video. I'll have to maybe get out of the Zoom call and come back.
No, I think, Sasi, we can see you now.
Oh, is it? All right.
Yeah,
Perfect.
yeah. The video problem is fixed. So we have another question asked by Sandeep that if you could just speak a little bit more about Prodigy's process.
Right. So Prodigy Finance has a process which is online, and which you can. I'm just connecting with how things happen from the platform point of view, wherein when you create a profile, you get all offers. You will see even Prodigy's offer for what you are, which program you're going to. If you're eligible, you will see Prodigy's offer, and that will give a comparison, with different offers. Now, if you want to deep dive into that process, you just need to click on the relevant links on the platform, getting the application from there. You'll be directed to the Prodigy website. And on the Prodigy website, you basically start off an online application with them. You register yourselves, and you talk about which program you're going, what are your GRE scores, what is the amount that you're looking for. It's just a 5-minute application that you fill in. And immediately you will get a view on what is the offer that specifically they have for you. Is it 7.48% or 7.56% or 8.32%? So you'll know the exact specific offer once you fill in the application. So it is a seamless way to get to your offer. And this process is not just unique for Prodigy. There is Leap Finance, which has the online process like this. There are many of the NBFCs which are coming up with processes like this, so that it becomes very easy to really know what is the offer. And then they will ask you for certain documents to be uploaded in the next 15 days or so. So it will show the deadline, and then you basically upload. If you like the offer, then you go ahead and upload the documents and complete the application. So you could see whether you have to invest this 30 minutes or so with all the document upload and all of that or not. You could basically see it at a platform level, and then shortlist which 2 or 3 institutions you will want to deep dive and apply, and then you can focus only on those institutions and go forward with your application. So that is how the process works. And once you upload the documents with any of these institutions like Leap or Prodigy, they will get back to you, say in a matter of 3 days or so, and they will basically let you know that the specific offer is actually can be better, and this is what it is. If there is any variation, they'll let you know, and then they will they will issue a sanction letter if you want to move forward. And you can use this sanction letter to go and get you a student loan. And one of the important things, I don't know why some of the people are not asking this question, because regarding in the time of coronavirus and COVID lockdowns that are happening, it's important to not really go into the branches and talk to each of the banks, right? So that way, an online platform is helping out some students. But another point from a bank's perspective, what are they doing? How are they changing their processes for students? They are getting the sanction letters valid for about next 1 year. And what is that leading to is that, even if you take the sanction letter now, or if you have taken, there is a possibility of making sure that they stay valid for up to 1 year. So when you defer your admission, you want to go for the next fall or spring, you will still be able to use this sanction letter. And right now, there are a good number of offers. So even if you are not looking to join for this fall, my recommendation, my personal recommendation is to move forward, take a sanction letter, and there are many sanction letters which can come for free. And you will know that, on the platform, which ones are free and which ones are not. You should go ahead and make sure that you take up at least the free sanction letters if you like the offers, and make sure that you lock in these offers, because each of the banks have their own credit pool. Once they finish that credit pool, they may stop disbursing amounts for this year, right? So take the sanction letter so that they are committed to you and you are committed to them, and they are actually giving you some of the best offers right now. Just because there is a lot of uncertainty, they want to save their business. So this is the time when you actually go and say that I want to take your loan, give me a sanction letter which is valid for 1 year, and see that it is the lowest possible cost. So what are the questions? Anything else that we need to cover?
So there's another question, Sasi, that taking a loan from an Indian bank with payment in INR versus taking a loan from an NBFC with almost similar rate of interest, but the repayment is in dollar. Could you just throw some light on that?
Right. So you are basically, when you say NBFC, many people look at Indian NBFC. So I'm assuming you're referring to the international lenders here, just based on the nature of the question. So in terms of the interest rates, see, what is the trend looking like? Right now, there is a good possibility that the rupee will further depreciate, and you will see that USD right now might be about 75, 76. It may go to 80 or so, right? So there is a trend towards that, so based on that assumption, I'm saying this. So if that is true, if that trend holds good, then what is important to understand is, if you are in the US and you have to basically keep taking disbursement from here throughout your 2-year program, if you take 40 lakh from here, that 40 lakh may not be enough. Suddenly you will need to ask for 44 lakhs, just because you will need to convert more rupees into the same number of dollars that the university initially asked you. So that variation is something they should be mindful about. And with an international lender, they give you dollars, you pay university in dollars, so that variation will not be there. But as long as there is flexibility on NBFC side that they will give you a top up or increase the loan amount, you should be comfortable with that. And in terms of the interest rate, one of the things that you could be mindful about is that if there is a international lender who gives an interest rate at 9%, right, and there is someone in India who is giving mostly a 9% would be given by a public sector bank in India, because private banks start from 10.5% or so, 10.4% or so, they go up to 12, 13%. NBFCs usually start at 10.5%, go up to 14%. Public sector banks start at about 8.5%, go to 11%. So in this window, if I consider 9%, mostly you will compare it with a public sector bank giving that interest rate. And that will be mostly collateral, but let's ignore the idea of collateral. A 9% from India, a 9% from international lender, it is, every time you actually pay back. If the probability of you settling abroad is high, if you're confident about that, then you go ahead and take a loan from an international lender. If the probability of you coming back is high, and that is what you think you want to do. For example, I was damn sure that I'm going to come back to India. The moment I even applied for Fulbright scholarship, I was sure that I'm going to take the scholarships if they give me, and I'm going to come back. So for people who are sure about coming back, then it could be and if you're taking a student loan, it could be reasonable enough to take an Indian student loan, just because there are tax exemptions that may come in for your parents that will reduce effective interest rate further. So that way, a 9% versus 9%, Indian 9% will win for such a student. For those who are trying to settle abroad, 9% of an NBFC will win. If the variation is there, then I would say look at a 0.5, 0.6% variation. For example, even if there is a 0.5% variation, these logics will hold true, because there are transaction fees that you will go through for every time that you need to transfer money, either from a disbursement into a fee payment, or you want to pay off the EMI after graduating, you want to pay off an Indian lender, you will have to use some kind of a service, Remitly or TransferWise, whatever you use to send the money back, right? So you will end up losing some transaction cost even there. So mindful, 0.5% difference doesn't matter when you are comparing an international lender versus an Indian lender. I hope I was able to answer that question.
Yeah, awesome.
Okay, let's see what next.
So the next question is from Mohit, and he says like, how does loan processing differ for non-US universities? Because there are a lot of people who might be applying to non-US universities. I think it's a pretty good question.
Perfect. Thanks for covering that, because we talk so much about US and we sometimes ignore the fact that 60 to 70% of Indians actually go to non-US countries. It's only 30 to 40% actually go to US countries. So let's talk about that. The non-US countries, one of the dominant trend is that many of the banks will ask for collateral. You talk about Australia, they ask for collateral. The Australian government enforces that in a way, right? It has to be secured and all. So it lists out certain specific banks. So you can only take, some specific banks or NBFCs routing money through other banks. So for Australia, you will find such a trend wherein collateral you may not be able to skip in 80 to 90% of the cases, but only in some cases where you're going to the top 8 universities, there is a possibility of a non-collateral option. And that there are few players, private banks, for instance, they're happy to give some non-collateral options. NBFCs are happy to give some non-collateral options for those. Public sector banks don't expect non-collateral options. And in terms of UK, Europe, if you go towards these countries, you will see that again a collateral has become more of a trend. But there are some NBFCs which opened up non-collateral options for UK, for instance, and up to a certain amount even for Germany, right? So there are possibilities that you can get. Now, I cannot talk about specific lenders here just because it is very profile dependent. And that's the reason I'll have to ask you, say, about 10 questions. Instead, just fill in the form on the platform. We will be able to directly get the lenders say that they can give a non-collateral or not. So on the platform, you can ask that you want a non-collateral, and the request goes to each of the lenders. So, but there is a possibility. In terms of Canada, it is more flexible. There are more non-collateral options available for Canada than other countries. And that way you have an advantage. You just need to ask, every lender who is looking at Canada as an option. Most of them are. And, but the limit, the amount that you can take is actually lesser in Canada compared to, say, for example, US, right? In US case, from an Indian lender, you can get up to 50 lakhs or 55 lakhs, right? An NBFC could go up to 55 lakhs without a collateral. But in case of the Canada, and if you are looking at that country, you will often see 30 to 40 lakhs as the limit. So with each country, the limits vary. For Germany, they will not give you maybe beyond 20 lakhs. For Ireland, maybe about 28 to 30 lakhs. So there is a different limit for each country that each of the banks have differently, right? You talk to Axis Bank, they will have a different limit. You talk for the same university, you talk to ICICI Bank, they will have a different limit. So it varies. It is very profile and country dependent. I hope that was answered.
Yeah.
Okay.
Yeah, Shashi, it was very well answered. So the next question is, what banks are lending to international students without collateral? And please explain the details, like interest rates and other details. That's one of the question posted on the Q&A chat.
Okay. What banks are, sorry, I got cut a bit.
What banks are lending to international students without collateral? Basically, the banks which are actually providing collateral free loans to international students. And
Right.
what about the rate of interest?
Right. So there are two kinds of banks within international students that we talked about, right? If you're talking about non-collateral loans, there are options like, Discover, Citizens Bank, or SunTrust. There are options within US which give a certain kinds of loans, but you should assume out of 100 students, maybe 1 or 2 people will be eligible, because most of them will be asking for a co-signer in the US. So if you have a US co-signer, and if the US co-signer is ready to take and sign your loan, then you may get an interest rate of even 4% or 5%, from these banks. But importantly, there is some flexibilities that some of them show. For example, you go to Discover Bank, the Discover Bank would partner with multiple institutions, for example, CMU or, or few other institutions wherein they open up, or UCLA, there might be a partnership. So there are partnerships which lead to they saying that you don't have to give me a US cosigner. I see that you're going to a very good university. I will give you a loan, but I'm only giving you this much. And there are also credit unions at each of the universities that you're going to. Look at these credit union options. Are they able to fund international students? So some of these credit unions give international students loans, and mostly we saw a trend that it is possible for a B school or an MBA, in terms of these credit unions. But you could, nevertheless, you should check that. So that is the space which is banks who are sitting in the US and mostly focused in the US market. They are not really looking at the international students, but they created some flexibility for international students. The second set, which are like Prodigy Finance, Leap Finance, Empower, these are the players who are looking at, at the Indian students actively. They are saying that you are great, you are going to some of the best institutions, we love you, and here are our, here are the things that we can do for you. And they're actively seeking you to actually apply to them. They are actively, creating their processes that will work for an international student. Now, the interest rates for these would start anywhere from 6.3% to about 11.5%, right? This is the window that mostly they will play with. Two things that you should be mindful about. Interest rate doesn't mean everything. APR is what you need to ask for. APR is the, annual percentage rate. Basically, what you pay at the end of it includes all the processing fee, right? So APR is nothing but if you take a 40 lakhs and you have a 7% interest rate, they are saying that I am charging you 4% on your 40 lakhs. So this 1,60,000 that gets added to your loan amount. So effectively, you'll be paying interest on 41,60,000, not 40 lakhs. So, but if you just simplify it and ignore the extra 1,60,000, for 40 lakhs, what is the effective interest rate? So instead of 7%, it would look like you are paying 7.5%. So this is APR is the reality of things, and that is what you need to check. Prodigy Finance might put out a 6.3% as an interest rate, but at the same time, it will show you APR, and that is what you need to compare with the public sector banks offers or other players like Leap Finance offers. Leap actually asks you to pay upfront, so its interest rate is equal to APR. So in that case, it is very clear, but you will need to pay a cost upfront, which is separate. So it's a separate transaction you should be mindful about. That is happening even before you jump into the loan. And this is the APR and the interest part. The second part is floating and fixed. Prodigy Finance has a floating interest rate, which means that with the changes in the economy, the interest rate may go up or down. So there is as per the economy changes, it will happen. And mostly, if the interest rate is going up, you'll be capable to pay, these loans. Just because the economy is going up and down, your incomes may also go up and down. So I just want to let you know that a fixed and floating is something that you can evaluate, but it's not a huge determining factor because you can really not predict on how things will move right now.
Yeah,
I hope
makes sense.
That answers, right?
Right.
Okay.
So the next question, Sasi, that we have is from Rahul, and he says, like, can you get a loan for PhD if you're not fully funded and need around $5,000 per year?
Yeah, it's possible. $5,000 would come to less than 4 lakhs. Firstly, you should look at public sector banks, because under 4 lakhs, without a collateral, without a cosigner, some of the public sector banks, most of the public sector banks should be able to do it. Sure. Now, if you have a relationship with any of the public sector banks, go get them for that. And if you need more than $5,000, because you said per year, which could mean in the range of 4 lakhs, 5 lakhs per year, and for 5 years, it may be a little more in number, right? So for those cases, there is a possibility of getting loans even for PhD programs. Just that everyone knows that you're not going to join a job and start paying the EMI immediately. So our options will be mostly collateral backed options. So if there is a collateral option, then there is a possibility. But sometimes there are flexibilities they create. If you're going to UK, an MPhil program or a doctorate there could be, say, a 3-year length instead of a 5 or 7-year length like in the US. So it really boils down to the specifics. I would say we currently actually, one of the students came in for an MPhil program. So he is getting some offers. So why don't you try putting in the profile? That will give you some visibility.
Awesome. Yeah, makes sense. So the next question that Akshay had was how they predict a salary from the beginning. Like you mentioned earlier, like they use data banks, they use data to predict your outcome, like what interest and everything. So I think that's what he wanted to know.
Right, and each of the banks will have it, in different ways. The evaluation of you as a person really stems from what your family is like from a financial point of view. When they ask about family income or things like that, they will try to understand what is the base looking like. Is it comfortable from a bank's point of view or not? Will your father pay this loan or not, if there is a co-signer involved, right? Now that is one level of understanding, but the crux of it is in, more and more banks are moving towards understanding you as a student, whether you go to a university or a program, will that lead to you actually being employable, and what is the potential salary that you get out. Mostly they look at placement data from these programs. They look at a little more nuanced placement data than just average salary. They look at number of people who graduate and then average salaries within that. And it's not that they are perfect, and it's not that they have data which no one has, and then suddenly there is so much perfection in their data that they're able to predict all this perfectly, right? There is no such data which is foolproof and which is comprehensive that exists today. But institutions are slowly building with their own experience. For example, Prodigy might be, this is a guess because I never sit in the credit teams, right? So, but as much as we understand from how they play with it, they might be looking at placement data for sure, actively on a yearly basis, but they will also look at what the Prodigy students have been doing in the past. Did more students from Texas A&M actually fail to pay their loans last year? And so they will maybe cut down their risk by saying no to more Texas A&M students this year. So banks, it's not just Prodigy, but banks generally look at their own data. Credila has been there for 12 years. They look at their own data. Prodigy has been there for 10 years. They will look at their own data. And the other place might be looking at industry level data of the last decade. So there are different sources that use, and they use all of those nuances. For example, what is the connection between GRE score and employment? What is the connection between your verbal scores and employment? Or what is the connection between you basically going to this program as an Indian student, and how many international students actually got placed and how many Indian students got placed? So some of the banks might be looking at such nuanced data so that they can predict whether you are a good bet for them or not.
All right. Next, Josna asked a question like, according to you, which one is better with respect to authenticity and overall process, Prodigy or Leap or Empower?
Well, it's a tough thing to say. Prodigy has been around.
Yeah, it's a very.
It's just because, see, they're all genuine lenders. That's the reason we are in the first place talking. We don't want to talk about anyone who is not genuine. There might be a list that we completely ignore and blacklist in general, right? So these guys are, they came up into the discussion, and we are talking about them actively just because there is a good, sense of creating products which will work for students among these companies. Prodigy, if you evaluate authenticity from the point of view of what products they brought in, both of them are good enough, right? It just caters differently to each student. For example, if you go apply to Prodigy, they might have an offer which could be lesser than what Leap is offering, but their processing fee is higher. So it all combines and clubs together, and then only you can evaluate what is really working for you. Until you don't get specific offers, don't judge. And the second part is the Leap Finance is Sequoia funded. It has its own credibility. It's a genuine initiative by people who are in this sector. So there is enough confidence that you can have on them, just because there is enough value that you see around people who set up that institution, and also who are doing some genuine work around this part. So there is, it's hard to say that this person is authentic and this institution is authentic and this is not. All of the institutions are doing some genuine work. Whether they're reading the customer's needs effectively or not it depends on what is the offer that you sent you, say on the platform. That is one way you could evaluate.
All right. The next question is from Siddharth, and he asks, for a student with the tier 1 college admit and collateral availability, which bank would you suggest? Thank you.
Okay, tier 1 college, and what's the second part of that?
No, wait 1 minute. Yeah, tier 1 college and what and collateral availability, which bank would you suggest and why? Thank you.
Okay, so if you are now, what is tier 1, right? I see tier 1 as, say, just the Ivy Leagues and the Stanford, for example, right? And there are private banks and there are institutions which keep that tier 1. They also have their own categories of universities, right? They keep this tier 1 to be so small that sometimes what you think is tier 1 is not their tier 1, right? And tier 1 is not based on popularity. Banks want to look at whether their money is coming back or not. It's not about you going to the most popular institution or not. It is basically boiling down to whether the money will reach their bank accounts after you graduate and get placed. So their tier 1 is based on financial ROI. Your tier 1 could be based on overall ROI, which is you should like the culture of the place. You should like the research in the place. You want it to be maybe closer to your cousin's place. It could be just anything. That is your ROI. So I'm just stating that they come from a very financial point of view, and based on each NBFC or a bank, the tier 1 length, the list length could vary, right? A private sector bank might have a lesser list and be very focused that I'm not taking any risk beyond that. Whereas an NBFC will say that, oh, my tier 1 is good. You're going to, even 70th or 100th ranked university, that is still my tier 1, right? So coming to the point of which universities could be better, the first thing that I'll tell you is that that's the question that is not easy to answer. And you may not like this answer, but the reality of it is it's not just your university or a program. It's about your profile too, along with the university or the program. So unless there is a complete decent amount of data that you give on your profile, a lender cannot say that, oh, you have this good a profile, I can actually give you, the better interest rate that you did not see on the website, right? So let the communication happen. But generally, as a trend, you could look at international lenders. You could look at, even public sector lenders. Something that I missed mentioning, public sector lenders are not all looking for just collateral. They will obviously look for collateral. Without collateral, they will not give you a loan. Above 7.5 lakhs, there is no loan, right? But within public sector banks, there are banks which will value your university a bit more than others. And each of the public sector banks will have their own list. Sometimes they are not even on their websites. And we were surprised that why are we not communicating these things, right? If at all it is very clearly put out to the students, they may actually change their admission decisions just because you are giving them a loan and someone is not giving them a loan, right? So anyway, the point is that it varies even within public sector banks. So your tier 1 bets could be, if you have collateral, your public sector bank could be a good option. But in case of, and which one to go for, you can check on the platform. We compare even the public sector banks. And for without collateral, you could look at international lenders who are better bets, but they don't sponsor all the colleges. Sometimes you will be surprised, even in tier 1 colleges, tier 1 universities, some programs won't be funded. And then comes the private sector banks and NBFCs. They are quite competitive in the usual tier 1 that we know of. Sometimes you may find better offers from an NBFC compared to a private sector bank, just that they feel you are more risky, right? Just because of their conservative mindset of the credit team, sometimes they may not give you an offer which is better than an NBFC. But NBFC might see you, a bit more differently. So international lenders could be surely one bet. And international lenders' interest rates could also reach about 10% or 11%. So NBFCs will also be a good bet, and private banks could also be a good bet. So, I can't be, I want to be more specific about this, don't doubt that, but the idea is it just varies based on different data points. So the best thing is, give me more details around your profile. That is when we could tell you which one is the best for you. What else?
So Sasi, guys, so we will be taking last 5 questions. After that, you can go to the GradRad page, reach out to Sasi and reach out to the GradRad team, or you could, the remaining questions I'll post on my Instagram. I'll tag it so you can ask me the questions. I'll probably and we can conduct a second session because I think we're running out of time. So the last 5 questions we have written it down. So I think Sasi will go with those questions.
Sure.
After that, all right.
Yeah.
So the first question is, okay, I don't know who wrote this, but what if the fall 2020 semesters online? Will the bank, NBFCs, and national lenders disperse the loan amount? So I think everyone wants to know because a lot of people want to defer their admission, or some people have online classes. So how would that affect?
So how is it? How is the sector handling this uncertainty, or how is the student loan? What is the effect on student loans? Is that the question there? Am I right in understanding?
Yeah, the question is, what if if the session is online, the fall 2020 semester, how will the banks, the NBFCs, and international lenders disperse the loan amount?
Right. So it's an important point to understand, and thanks for asking this question. And we have been discussing with multiple lenders in really understanding how are they going to play this scenario, right? Because till this point, you understand from a bank's point of view, you have an admit, you got a visa, then they disperse. Right now, you have an admit, but you don't have a visa. Universities understand that you cannot get a visa, and then they are saying start online. So suddenly, a milestone that they have been checking for, that is your visa, because that way is the window to you actually getting a job later and earning more so that their money is safer. Suddenly that milestone is removed, right? So banks are now a little confused in a way that, what do I do without a visa, right? Do I disburse or not? My money is coming back or not? So this is the question they have. And some of them positively address this, and some of them are still in the uncertainty. So some of the, for example, Prodigy, Leap, they are quite confident that they'll disburse the amount that you require, even if you are on an online semester. ICICI Bank has made the entire process online, made the sanction letter, a year valid, and it is basically saying that we will be disbursing you. And there are some other banks which say this. As much as I understand, they are going to actually ask you to pay back the loan, if at all your visa doesn't come through after you spend the online semester. So you went through an online semester, and then you are among 300 people in that university. Only 200 people got a visa approved. The other 100 people, if you are among them, what do? Right? You either wait for the next semester, you defer your option and then do that, you working with the university, or you just leave the option and look for something else within India. Right? If you are looking back at India as an option, their money is not safe in their view, right? So they are going to say that if your visa is going to be rejected, be ready to pay me back the amount that you're taking for the first semester. And so whatever you pay for the first semester, make sure that it is a discounted rate with the university. Many students think that you don't have the power as a single student, but you can really put together a petition working with multiple students, multiple international students, and ask the university to reduce the amount that you pay for the first semester. There are some universities which did not reduce the amount, but there are a good number of universities which said, don't pay me 100% of the tuition fee, just pay me 30% of it, because it's an online semester this time. So make sure that your risk is reduced by reducing your cost. And also on the lender side, you should look at student loans which will not pressurize you to actually pay the amount back the moment the visa is rejected. Where will you pay from? If I take a non-collateral loans and pay 10 lakhs towards a university, and then suddenly my visa got rejected, where would I get 10 lakhs to pay them back? I don't even have the possibility of paying the EMI, right? So all of these need to be considered. and banks are also a little conservative about it. So you need to find out, and that basically some of the international lenders are a little more positive, some of the NBFCs are positive, and private banks will be happy to check based on the profile. They may issue things on case by case basis, even NBFCs, to be frank. So once your profile is in, we could give that clarity based on that profile data.
Yeah, awesome. So I think Saloni asked this question. So she signed up on the GradRight platform, but she's done her undergrad in Singapore, so she's not able to find any college in the list of bachelor's colleges. So she wanted to know, is it available only for like Indian students who study in India?
Right.
Is
So
that the
thanks for
issue?
writing in. For those who are going for undergrad abroad, we are yet to create the pathway for you, but we are actively working with students. So if you are looking for an undergrad program, do write to us, and we will make sure that a different link will be sent to you, and you need to register on that link. But if you are going for masters and any PG programs or postgraduate programs or graduate programs, then this is the current platform will should work for you.
Even PhD programs are included, right?
Correct.
Awesome. The third question, is it possible to get loan from two vendors at the same time if one is not enough?
Right.
So I think
So
someone asked this.
that's a good question. Again, many people think that they cannot take sanction letters from two lenders. I think it's a point that needs to be clarified. So the amount that you take cannot be from two lenders, but you can take sanction letters from two lenders and make sure that you only ask for disbursement from one of them. You cannot go back and say ask both of them to disburse the amount, because legally you are signing the clause that you're not taking another education loan, and that is how your risk gets assessed by each bank. They see 50 lakhs is your requirement, they see your income potential and all of that, they see that you can pay back 40 lakhs, they only give 40 lakhs. Now if you suddenly take another 10 lakhs from another person, another lender, you are increasing their risk. So they will, according to RBI rules within India, you cannot mix up loans. So it is important to make sure that you stick to one education loan player at a disbursement stage. For sanction, for this particular scenario, you could go ahead and take sanctions, a free sanction wherever available, and make sure that you keep it with you.
All right.
That was well answered, Sasi. There's another question that after you get the sanction letter from the bank and you plan to defer for next fall, so and if there's a decrease in the interest rate, would that decrease in the interest rate affect the loan that the loan amount that they have asked for?
Right. So it depends on which lender you're taking it from, whether they have a floating interest rate or a fixed interest rate. That will determine, those interest rates. But at any time before disbursement, because you did not, create their business yet until you take the disbursement. They cannot ask you for EMI payments until you take the disbursement from them, right? So they want your business, and that means you can always go back to them and say that, there is a better interest rate that you are able to offer now as per communication on the website, or you could put it on the platform. You could create another request from us, and then we'll see what is their interest rate that they're offering. And if it is lesser, you can go back and say that, now you are offering a lesser interest rate, change my sanction letter to a lesser interest rate. That way you will make sure that you will be on the cheapest. So there is no downside of taking a sanction letter now. There is only an upside. But if their interest rate goes up, you don't go back to them and obviously ask them to raise the interest rate, right? So the sanction letter is a commitment from them that they are giving you, and so it will hold that way unless they mention the expiry date beyond which it may change.
Yeah, that was very well answered, Sasi. So there are these last two questions. One is that which one is better in terms of repayment from interest rate and RPA, and the other is it safe to take a non-collateral loan, and will that affect the visa?
Right. Again, the interest rates are, as I mentioned, the interest rates start with 6.3% for international lenders. APR would be from from about 7% if it is 6.3%. So it may go from 7% to 11%. So each of these windows of these four categories, for example, 7 to 11% for international lenders, public sector banks nearly 8.5 to 11%, the private sector banks about 10.5 to 12.5%, and the NBFCs from 10.5% to 14% or 15%. So each of them has you see that there is an overlap with each of these interest rates. So for example, an international lender will surely win the case in terms of interest rate compared to an NBFC, which is giving it at times, which may give at 14%. But the same NBFC, if it gives at 10.5%, which is possible, and the international lenders gives you at 11% or 11.3%, then an NBFC would win, right? So it really is at a profile level. There is a possibility of anyone being better than anyone else. So that you should be mindful about, and let them just fight for you or compete for you, right? Why do you have to go through all the research and figure out which one is better and which one will give? You don't have to put in the energy to evaluate all of that. What you need to let them say, see is your profile, and let them say that this is the best they can do. And they will fight for the best, because there are other banks which will take you away otherwise, right? So it is, you are in an advantageous position, and let them play out the research for you. And the second question that you asked about non-collateral loans, whether that will affect the visa possibilities, it is a misconception again, right? If today you should treat non-collateral loan as if it is a liquid cash payment. If I have 50 lakhs in my account, will I be penalized for using that 50 lakhs towards my visa or towards my university costs? No. So many people see that there is a disadvantage with non-collateral. It's actually subtly different. Let me explain how. If you have a collateral, then it will make sure that it will tell the loan officer that you have something here in India, which leads to a greater confidence. For example, that's the idea, right? But at the same time, if you have a non-collateral loan from any of the lenders, that doesn't mean that there is a disadvantage that you are at. There are other points that you could use to really make sure that your case is more convincing. But a non-collateral loan will not be penalized by the visa officers, as much as we understand from our conversations with embassies. As much as you are honest and genuine in putting those funds up front, there is no problem in facing any of these rejections. So that is what we learn, and you shouldn't be worried about taking a non-collateral loan.
That was very well answered, Sasi. Okay. So there's just one last question. I think Mitali has written that she had applied for a loan from SBI Bank, but due to the pandemic, things have become pretty slow. And should she wait for loan sanction to come, or should she try to pay upfront fee for master's program to attain visa?
So if you are capable of paying upfront fee for your master's, it is always a good idea to use your own cash instead of taking a loan, as long as you will not use that cash to invest in something else which will get you better returns, right? One advantage with a student loan is that you have tax benefits, and if you take it from within India, and then you have the liquid cash that you have, you can use it for some other purpose. And note that with an admit, you are suddenly having a separate cash flow into your bank accounts. You are suddenly eligible to take 40 lakhs or 50 lakhs from someone, but that will come at a cost. So you need to evaluate if your father would do something with that 30, 40 lakhs or 10 lakhs or 20 lakhs. That will lead to an interest rate of say 11% or 12%. Then you better invest there and go for a student loan and take it at 7.5 or 9%, right? So that difference is something that you will really earn for yourselves. But if that is not the case, you are putting it in an FD, then it is better to just use that for your university admission. And in case of SBI loan, I would say it is as much as we talk, they are also not confident about when things will move fast and when things will conclude, right? Everyone is in a flux right now. I would say if you are looking for a loan, just make sure that you take a free sanction letter from someone who will give you a free sanction letter. With SBI also, you will end up paying about 10,000 or 11,800 with the GST and all, right? You don't have to go through the process of waiting and then figuring out. Rather take a backup, make sure that you have this sanction letter in place. Let SBI come through if you think that SBI offer is better, which we can evaluate for you if it is so, and then you can choose whichever you want to move forward with.
Thanks, Sasi, for addressing that question. Guys, we've almost come to the end of the webinar.
Yeah.
Thanks, Sasi, for answering all the questions. Guys, I've put the an email ID in the chat box. You guys can shoot a mail on that particular email ID, and they'll get back to you.
Yeah.
Utkarsh, do you have any last minute things to say?
No, I just wanted to thank Sasi and the whole Gradite team for organizing this with us. It was like very insightful, and Gada, I'd recommend you to check out the platform and get shoot the mail like how Shishri said. And apart from that, if you have any questions, you can always ask me on my Instagram. And if you want one more session regarding the same, we could do it on my Instagram page, because like I think a lot of audience knows me from there, so it would be convenient for other people too. And apart from that, yeah, just let me know, like just we need a feedback, like how it was, so so we can conduct better sessions. And yeah, that's pretty much it. I think Sasi, over to you.
Thank you so much for organizing this, and I hope I was helpful to some of you guys in terms of addressing whatever we learned in the past, right? We were students in the past. We tried to look at our student loans and scholarships ourselves, and we thought we could come up with a solution for that. So that is our attempt at GradRight. And in case you have a loan, you don't have a loan, it doesn't matter. I would say just try it out and see what exactly these lenders can give out, because many students do not know that they can find a better option. Many students believe that their option is the best. Now, I just want you to challenge that and be a little open about it, and spend 5 minutes to register your profile and check it out if that is true or not. So that openness will help. And also, lastly, I know that most of you are in the middle of uncertainty and looking at your deferred options, online programs, etc. But take confidence that you are with your family and you are having a great time at home. And just keep up your self-esteem and confidence, and we are all there to make sure that we move forward. So it is something that we are all with you on, right? So all the very best with that.
Thanks, Sasi. And guys, if you have any other queries, Utkarsh and me, we both are pretty active on the Orchid page as well. You guys can shoot questions to us, and we'll try to organize another webinar soon and get Sasi on board, because we saw that there were a lot of other questions as well. And yeah, thank you guys a lot for attending on a Sunday afternoon.
For spending the Sunday with us. Yeah, definitely. So
yeah, thank you.
All right.
Have a wonderful day.
Thank you.
Thank